Let's see if it's sharing on Twitter. Oh, I just stabbed myself with the micro strategy done. Why is it not live here? Oh, is there people? There's eyeballs now. I couldn't see if it was. All right, there it is. Got to make sure the channels are connected. So hey folks, welcome back. Episode 2 of the ryQuant broadcast, and this is going to be one of those episodes where it's, you know, the classic Michael Scott meme of like, sometimes I just start a sentence and I just hope to figure it out along the way. Basically no prep work for this, but just given the magnitude of the moment, and I hope people can hear me. I haven't even looked at the chat. There is a lot of moving pieces, and here's one of the moving pieces. Allow me to introduce Adrian Pruitt, who's in the building. He's filming a documentary, and we filmed for that today on the live stream, us two right here. And it was just also awesome to have a good friend to enjoy the earnings call with. Like, that's actually a rare experience. We did that at MicroStrategy World in 2024. There was a group of us, and I think that's like the only time besides this that I've ever done an earnings call in person. And for folks like us, that's kind of like, you know, a little Super Bowl. It's more than just a one-off football game, but it's a cool event. So it was cool to share that with a good friend. So yeah, back to the Michael Scott thing of me just like winging this one. Don't have too much prepared. That's a lie. I have nothing prepared. I'm gonna like reference the slide deck pretty heavy here and just hope that some interesting thoughts come in. And if people want to ask questions in the chat, that'd be awesome too. Oh, I forgot to put the title in. But let me just go ahead and start to share my screen here. All right, here we are. So kind of first, you know, quick point here. I think that there was so much great context provided, and for some of this, you know, for some of us, this was just a refresher. But I think as they keep like refining the pitch over and over, and it gets sharper, it gets better each time. At least I feel like my understanding gets like a little bit better. And in terms of just visualizing like the preference ranking of the capital structure, in terms of understanding like the risk reward, but also the trade-offs of each of the preferred equity offerings, and which specific, like there's the global fixed income market, right? But they're even breaking it down to a even more granular level than that, which is of course great, where it's like, you know, Stretch is going after like the money market funds and like that type of like near dated, you know, paper of some sort, whereas Strike and Strife are longer dated instruments. And then they go into, you know, explaining their thinking as to like, well, the reason for that is because, you know, if you ask 100 people, you know, would you like, you know, short dated, meaning without the long commitment, meaning without having to go long time on a 20, 30 year, you know, fixed income instrument. It's like, if you ask 100 people, would you like, you know, to basically have a savings account that's double your current savings account, maybe even a little bit more than double, depending on what rates people are getting and like where the Fed funds and SOFR are. as far as those interest rates. But it's like, yeah, there's a tremendous amount of capital who would want that. That was when like 99 out of 100 people are going to say yes. If you can give them little to no volatility in the principal amount, or you could think of that as like the price of the strike share. If you can give them little to no volatility in that, and a 9%, $9 on a $100 par perpetually, without the long bond instrument component to it, but wait, there's more, and pay them on a monthly frequency. That is big. That is very big. That is what aligns the interests of all the of all the people buying the fixed income securities, right? Because I don't run a business, but I would imagine that businesses have monthly expenses. I do run the business of my own life, so maybe that's a bad joke. Let's move on. I do experience, monthly expenses, so I'm put everything on the credit card bill. That comes once a month. What else do I pay for? Food, all that stuff comes in once a month. The phone bill, the whatever other bills. Why am I drawing a blank on bills? I don't know. I think that's because I just put everything on the credit card, just pay it off 100% each month. Sometimes do the 0% APR credit cards. Shout out Hermes Lux on that. Getting back to the capital structure of strategy. I talked a lot about stress right there. I really do think that is like the big home run. The management talked about that. But here's the other thing with the preferred offerings, right? It's like, to me, there's no downside if if no one likes Stride. Who cares? We'll just bring the next product out. So this is, I talked ad nauseum about like the uniqueness of strategy in episode 1, but this is just another like thing that seems like completely unique to strategy, in that it, and you learn this, like if you listen to Bezos in like the early years, like how like the concept of like experiments, it's very big on this like concept of experiments, and the risk reward trade-off between either doing an experiment or not doing an experiment, and the opportunity cost of doing the experiment or not doing the experiment. And what he's getting at there, these like experiments are like potential like areas of growth in the business, right? But again, back to the uniqueness of strategy, when you're thinking about Amazon, like it's a huge physical domain player, got to hire a ton of employees, got to pay for a bunch of steel, I-beams, iron, copper, to build all these like huge facilities. Like there is like real costs right away up front, unlike strategy, who's just selling fixed income securities. But anyway, with Amazon, there is like real consequences here, right? Like if they invest in something, like if like Kindle didn't work out, that's problematic to the business. Of course, if AWS didn't work out, my gosh, this stock would be trading at 99% less value than it is now if Amazon Web Services didn't work out. So that's the big example of this. But a couple other things along the way, like if Amazon Prime didn't work out, Amazon Prime was a big bet, right? Because it's like, all right, we're running a business that makes like no margins, and we're now gonna absorb the delivery costs in exchange for this kind of like fixed, 100, what is it now, like 140, 150 a year. And Jeff's thinking was there, like, we got to expand like the customer base, all that kind of stuff. So it's worth absorbing that cost. And I know I'm starting to rant on Amazon, but part of the reason I'm ranting on Amazon is to like highlight the business challenges that I think every other business on earth is going to face forever. And it just comes back to the uniqueness of strategy as a company. Oh yeah, this is what I was saying about the it's like what strategy has seemingly created is a risk-free experiment zone. You know what? Get Bezos on the phone. Get Bezos on the phone. Have him call into the broadcast. All we have to say is risk-free experiment zone. That's it. 4 words. That's it. We don't even need the classic 6-page memo that Bezos likes. It's really just 4 words. And even that's like a gross oversimplification of it. But again, the ryQuant broadcast has a mandate for fun. So if I don't live up to that mandate, then I'm in violation of the mandate. So we want to avoid that. But yeah, again, capital structure. I mean, seeing the whole picture, seeing the risk reward of like each of them, seeing the trade-offs of like each of them in a comparative sense, as well as the broader picture, right? Of like we're building a yield curve, meaning like we're going to service all of these markets, and hopefully there's not, you know, that much downside risk to this whole risk-free experiment zone. And sure, I mean, there could be some shreds of like, you know, credibility risk. Like if Strike and Strife would have gotten like cut in half, then it might be a very different mood right now. You know what I mean? The energy on Twitter, very positive. Everyone's chiming in. The energy on the call, very positive. A lot of smiles. I even heard a few jokes. I think Fong might have smiled. I mean, this was a historic day. I think Long Fong smiled. Need I say more? I really have no idea where I was going with that one. But yeah, no, got the full picture, got the risk reward of each of them, the trade-offs of each of them. What else can I pretend that I know what I'm talking about? Because you got to entertain these people. I was just telling Adrian that, you know, you got to put on a fun show for folks. Oh, here's a good thing. I mean, these it's going to be like finding a needle in the haystack to find the exact slide I want here. I want the one that shows the over collateralization. By the way, let's pause here for a second. 130 slides. This thing is 130 slides. And it was like 2 hours and 9 minutes long. I'm no math wizard. But that's roughly a slide a minute. Roughly, not exact. Don't bring out the calculators. Like, it's actually 1.3, which is where strategy's MNAV should be. Actually, it should be like 1.1. You know what I mean? But the needle in the haystack, where's that one slide that just showed? Gosh, is this champagne problems or what? I'm never going to find this. It's the one that showed. Oh, it's this one. It's this one. This is it. This is the slide. I was just about to give up on that. Like this over collateralization in a vacuum, like strategy only, tremendous. What more could you ask for? Then you overlay it onto the universe of everything else out there, and it just screams boring. Well, actually, the one that screams boring, and again, needle in a haystack. Yeah, found it. Boring. The left side over here. It's just this one. The liquidity. The liquidity one. It's just so boring. The left side. The one I was just on though. The over collateralization. So in a vacuum, I think strategy's numbers are incredible from the 5 to 9 range, and then you overlay it onto everything else, and it's like, well, hold on, we talked about the boring thing already. These are also perhaps higher risk. Like I'm just piecing this together right now, but I think that argument's pretty easy to make. Like all of this stuff here, which by the way overlays with the same stuff here. It's like the same stuff. It's boring. That's really the main takeaway. Forget the safety. It's just boring. Like it's like, who cares? But I feel like the argument could be made that this like traditional stuff that's been here, trades no volume because it's boring, is actually riskier than our preferred offerings and strategy. Although that, to make that claim requires a bullish view on Bitcoin, no doubt. I totally get that. So that's like the one assumption that has to be baked in there. But I mean, this is just like incredible stuff. And building out the yield curve for Bitcoin credit. I mean, this is like the big thing here. Like this is it. This is it. It's like John told in Margin Call, except this is like a very like potentially good outcome, whereas what he was talking about was a potentially very bad outcome. By the way, Margin Call, I think that's Lehman Brothers' story, is it not? This is like the biggest mystery in financial. Is that Lehman Brothers? Because John Told sounds a lot like Dick Fold. Fold with an O or a U? I don't know. Dick Fold, John Told. I mean, I don't know. I think it's Lehman Brothers. But anyway, this is it moment. We're building out the yield curve. This is it. The amount of money that hangs out in these things, whether it's bonds, T-bills, short-dated stuff, long-dated bonds, agency, MBS. What does the word agency mean there? I have no idea. But mortgage-backed securities, preferred stocks, junk bonds, leverage loans. There's so much boring money just like sitting there, with very low expectations, like almost the lowest of low expectations, if I'm being honest. But here's the thing with that in terms of expectations, I'm talking about like an asymmetric, potential upside, but that's not what these people want. What these people want is they're putting a huge premium on an absence of volatility. That's why all the money sits there. And this is just one of those things with the human condition. People fucking hate volatility. Excuse my language, by the way. I don't want to turn this show into a dump on episode 2. But people just fundamentally at their core are so uncomfortable with vibration, change, turbulence, chaos, fear, uncertainty, doubt, entropy. And man, I mean, I don't know. I can keep going on and on and on about that, but that's just what the human condition is. And this chart or other slides and charts we can look at highlight that. The best one for this would be that rectangular one with, the $900 trillion of global assets. And more than half of it is parked in global fixed income and global real estate. Maybe that's one of the things people like about real estate. There's almost no volatility because there's no prices. So it just like sits there without a ticker symbol, without, being talked about. You're on CNBC. Imagine it's like, your house is now worth X dollar amount. And then the next minute they're like, your house went up like 3% or down 3%. You know what I mean? So there's almost like no volatility because there's no prices. So again, more than half of all the world's value is in low volatility, but also very low expectations in terms of like what could have been, aka opportunity cost, like missing out on like just tremendous upside over a number of different things, whether it be like, Mag 7, like, mobile wave era, like building a huge position in like Mag 7, or, oil and gas stocks, or like everything Buffett's done it his entire life. There's huge opportunity costs in missing some of these long-term moves. Gold in the 70s. I mean, we can go on and on and on about individual names and all this stuff, but there is a real opportunity cost to just parking the money in there. But again, the reason people do this is because they hate it when it goes down. Like what people like really want is they want this. What people really want, where's the camera? What people really want is they want that. And like this is their expectation of like how life should be, or like how their like investment accounts will perform. Like this is what people want. And I mean that's just a fantasy on both accounts, both in life and in markets, and honestly more in life, if I'm being honest. All right, so that's the yield curve. Again, this is it. I am starving, by the way. The other day I had a meatball sandwich. It was the worst thing I've ever had in my life. The marinara sauce was like ketchup, and it was one of those times where you're like, I mean, it was so bad. It was one of those things where you're like in a jam, starving, have to go from one thing to the next. Oh. All right. Superior yield and liquidity. We talked about that. Oh yeah, I just went up in slides. I'm gonna go down now. I love this part. I was telling Adrian, let me grab a tissue. You guys can all experience the because I'm not all right. Here's the thing. I'm not gonna buy boxes of tissues separately when I have to buy this. I'm not trying to impress anybody. Who cares? I'm very like utility first. Who cares about like the cosmetics? Who cares? We got work to do. That's the thing about live streams. Like in the Quampros days, like me and Joey like go to the bathroom. Hold on, let's edit this part out. We're doing it live now, baby. Tissues and everything. So I was telling Adrian in person, I just love this like broader approach, and what I'm saying is about to become very illustratively clear with the charts that we've seen for some time now. But it's like, all right, let me like reenact the earnings call. I forget if this was Long Fong or Sailor at this point. I think this was Sailor on this slide. Slide 59. They probably got to slide 59 by minute 40. I mean, it was fast and furious. All right, so the reenactment. So if you take a look at this slide here, you'll see that our products are better than everything else. Like, I just love that. Like, I just, and that's going to become so much more clear with what I'm saying with this. It's like, if you will, please refer to slide 63 to see that we're crushing everyone else. Like, it's not bragging because there has to be like updates, but like the numbers, I mean, this thing doubles every year for 5 years. It's like, by the way, bonds, nominal negative net loser of money. Nominal, meaning before you even adjust for loss of purchasing power. Nominal. I mean, it's just great. gold. It's like, who cares? You know what I mean? I will make a quick bull case for gold in the sense that like it's so anti-correlated to everything else. A recent good example is, March and April, I think May as well, going into the tariff thing. The only things going up were, the VIX and gold. Everything else was selling off. So that's really the bull case for gold. It's not an inflation hedge, it's a chaos hedge. That's the best way to understand gold. And that there are, interesting things that people, all right, I'll just say it. I own some GLD in one of my accounts. I sell covered calls against it. There, I said it. And the anti-correlation is nice as well. But if you, with the GLD, it's like it doesn't pay a dividend. But if you sell, not even like the 10 deltas, if you sell like 15% out of the money, covered calls on GLD 1 month at a time, you do that the whole year, that's a 9.8% dividend yield. I mean, not a dividend yield, it's a covered call, as a percentage of the amount of your position. You know what I mean? And then we're right in the ballpark of strike, stripe, stride, and stretch. So that's the confessional. I own a little bit of gold. I've studied this, through the Christopher Cole, the 100-year portfolio paper. Like there really is a bull case for gold, like solely in the anti-correlation piece. You're not gonna make much to the upside, especially when you consider the M2 money supply CAGRing at 7%. Meaning you take 10 minus 7, gold's giving you 3%, like real returns a year. Like that's not going to get it done. But the anti-correlation and then the ability to monetize it through the covered calls is I think kind of cool. Sorry. I think it's kind of cool. All right, let's move on. Adrian and I learned a new thing today about this symbol. And the Bitcoin purists are going to be like, see, he was never a pussy. I started coughing. Oh, we're doing it live, man. All right, back into character. The Bitcoin purists are going to be, oh, see, he was never a Bitcoin maxi. He's a sailor fanboy. He's just a shitcoin. Anyway, I just learned what the SAT symbol was. And someone tweeted about this or commented about this. That probably was to some degree like a very like well thought out, or like they put a lot of energy and emphasis into that, because they like sailors like tweeted about like sats per share in the past, but I think this is the first time like we've seen it in like slide decks and stuff like that. So that was something new. That was fun. And these next couple slides here are just so telling. Like this is like the torque story right here, and how like the value accretion can scale. And then in addition to that, there's a real sweet spot, right? They talked about the 20 to 30% like leverage ratios being like where they want to be, and again, I really don't think of this as like, leverage or debt in any kind of like traditional sense, meaning like, God, the suit pants, I'm an idiot. The formal dress pants are so restrictive when you just want to like throw the leg up. It's like, oh gosh. But we gotta do the real deal on a day like today. But back to the perceptions around like debt, leverage as it pertains to MicroStrategy. Like to me, it just seemed, I know it's similar, perhaps it's the same thing, but it just seems so different to like a traditional operating company who's borrowing dollars with the expectation of their own cash flows, key phrase, their own cash flows, going to not only service the debt, but also to eventually pay all of it off, right? In whatever kind of like tranche dynamic or in whatever like payback structure there is, that's like what the expectations are. And that just seems so different, right? And I guess perhaps some of those companies do end up having a round of dilution if like to the extent that they have to like hit their ATM, do some kind of like equity offering in order to pay the debt back. So that's probably where like the middle overlap of the Venn diagram would be. But the way I think about strategies, you know, leverage or debt is like it's all just future equity. I mean, all of it. Like the convertible bonds are converting into equity. The all of the preferred offerings, they're perpetual, meaning the principal's never being paid back. And that's not like a secret. I mean, that's like well known, well documented. You're just on the hook for the dividend payments. And we're not paying the dividend payments with cash flow because okay, back to the other example of debt. You know, there's two components here. There's the interest expense and like the debt in principal form, like the amount that you're borrowing. In Strategy's example, there's just the interest expense. There's no like principal amount because it's never being paid back. And I think I was talking with, it might have been Adrian, it might have been Tim Kotzman. I don't know. It might have been one of the many calls I've been on this week. It seems like Strategy's able to almost like buy Bitcoin at an extreme discount. And there's a couple assumptions to bake in here. So give me some rope, if you will. But when let me try and guess the amount of all the IPOs and the sprinkle of preferred ATMs that we've done so far. 5 billion, maybe 4 billion, maybe six. I don't know. I should know this, but the point I'm trying to make is, let's call it 5 billion just to make it easy. Let's say we brought in $5 billion so far between as if this is gonna crush me. Again, let's just say it's 5. We've bought $5 billion of Bitcoin with that 5 billion. Everyone still with me? But we're only going to have to pay such small like amounts of dollars over a long period of time, but we get all the Bitcoin today. And here's the other assumption that has to get baked in here is that one has to have the worldview that like the 7% inflation rate is the real like inflation rate. And I know people get kind of worked up about like the usage of the words inflation or CPI or debasement's another one. There's like a few, but like what I'm suggesting is if you look at, you know, from 1950 until now, the M2 money supply and you CAGR it, it's 7%. So I really don't get too lost in the weeds about the past 6 months inflation was this, the 5-year forward inflation expectations. Who cares? It's 7%. Let's move on. And that's I only ramble on this worldview just to give people, I don't know, insight into how I think. But I think that, or something like that worldview, is really helpful in understanding the value proposition of, going back to my $5 billion example, like getting to buy $5 billion worth of Bitcoin paying such little upfront and ongoing, admittedly, but we'll come back to that, but paying such little relative dollars for that at the beginning. And then as far as the ongoing thing, there's like the 7% decay each year. So yeah, I mean, folks can come to terms with that like however they want. Obviously, I'm giving people permission to think. It's really up to individuals to kind of synthesize through like something like that in order to really try and grasp like the value proposition here, especially as it pertains to like all of the super unique characteristics that are like literally only applicable to strategy and like synthesizing all these things together. I love this data table. Like just being able to like see expectations, or I should say being able to determine one's like own expectations, like maybe like pick a range in the middle or like something like that, but to also just see like how well thought out. And I mean, this really applies to like the whole thing, the whole presentation, like many working hours of people go into producing that like 2-hour earnings call. And it's just, again, it's just so great to see like how much effort and emphasis that like they're putting into it, as far as like creating new KPIs, creating new metrics, creating new thoughts, and being a thought leader in the space. And we're seeing market buy-in from the rest of the Bitcoin treasury companies. And so much so that they're the operating strategies, no pun intended, of these companies is to like we've kind of made the decision that like converts are a thing of the past. And I think for good reason too, right? It's like, I think I was just saying this to Adrian, or I hope I didn't say it on show number 1. But the converts, like there's only a handful of like windows of time throughout a year when, it makes sense to do a convert. And then that's got to line up with the demand cycle at that time for like convertible bond buying shops. And it's like a lot of stars have to align, and like the convertible bond market is just one of like many sub fixed income markets that exist in that like 350 trillion global fixed income space. So it makes like way more sense, and like we've learned this over time, to like release a line of like preferred fixed income securities where strategy gets to take back like more of the control here, in terms of not needing like 12 or 27 stars to align, many of which are some of which are out of strategy's control. It's like, no, if we can get these things like approved, registered, we can start ATMing, can start IPOing, start selling these things, let people buy them. So yeah, I mean, I really do think like the shift should be to preferreds for all of those reasons. And then it just simplifies the whole process, right? Like these convertible bonds that would last like 5 or 6 years, and then every couple of years we got to go find another guy or gal or shop who will give us another 5 or 6 years. It's like, let's just like automate most of the work. Let's take back some of the control of our own destiny here, and being able to like monitor, engage, and like assess the supply demand balances for all the preferreds, add more supply, like meaning like hit the ATM more, or like maybe take the foot off the gas a little bit. By the way, Dan Hillary, oh, how the tables have turned. look who's back, with this whole 2.5x MNAV. I thought of this because I was thinking about, taking the foot off the gas, if we have to with the preferreds. Looks like we're taking our foot off the gas a little bit with the equity ATM, which I think, not, I'm joking with the Dan thing. I'm just having fun. Great friend of mine. Where was I going with that? Bouncing too many things in my head. I think the biggest takeaway from strategy saying that they're going to take the foot off the gas, the equity Class A common MSTR shares, it just shows that like the strategy team is just meeting everyone where they are, whether it's the fixed income investor, whether it's their own shareholders, whether it's everyone. It's like we will listen and we will like adapt as quickly, like to the extent that we can. And I know people are going to be like, yeah, what about the proof of reserves? It's like they gave like the most thoughtful answer, and they have been for some time now. By the way, I was telling Adrian, I was like, the proof of reserves things, like if they like overnight put proof of reserves out, here's exactly what would happen. Everyone would go log in, check the site, be like, oh, okay, close it, and probably never reopen it. They would just, this group of people would just move on to the next like FUD thing. They would dust off the 6102 narrative. They'd be like, oh, wait until the government forcibly just steals MicroStrategy and the lawyers can't do anything and securities law is just burned. The aspect of ownership in America is just gone. They'll dust that one off. Anyway, back to the program. Let's keep going here. My gosh, I'm starving. Intelligent leverage. I mean, that's really what we were just talking about too. This one looks at Bitcoin AAR and leverage percent. Oh, this one looks at the dividend rate. That's the difference between these two. Good stuff. Nothing to add. Intelligent leverage. Universal of comparable asset classes. This right here. Can I highlight on this? No. Oh, I can, sort of. I wish this was the only words on this slide. I mean, keep the title, Universe of Comparable Assets, and it should just be like Mag 7, nothing else. That's who we're competing with. The other Bitcoin treasury companies. This thing, if we're right, this thing is a dominant tech monopoly that's building an irreversible moat of what we all seem to believe is pristine collateral in such a way that they will end up being the highest credit-worthy rating of all of the Bitcoin treasury companies, thus allowing them to be like the dominant, largest issuer of the best premium perpetual preferred fixed income securities. But by the way, that thing should be at 1x MNAV always. Here's the thing for the 1x MNAV bears. They never like present like their view of reality. They just say like it shouldn't be this, it should not be this, it should not be this. They never articulate like their side of the argument. Why is that? Why is that? Like what should it be? Should it just stay straight at 1x MNAV the whole time, zero vibration? Should it be 95% and then 105%? But those are the bumper lanes. You know, like the kids, you go bowling, you put the sides up. Like where should it be? And that argument has never been made. Another thing about the Bears, they never make memes. Like they're just not. optimistic, happy, fun to be around. You would not want, except Jim Chanos. I honestly, there is such a bull case for Jim Chanos. Stop. I know some of you people are like, no, stop. He is a very interesting, very well articulated, very, very, very seasoned veteran. I learned something from him today. Or was it last night? It's all the same thing. But he was talking about Meta's, like how they were like. I have to learn more about this. But he was talking about how Meta's like CapEx was like depreciating or something like that. I got to go look back at the at the tweet. But he was showing how like, oh, if we discount that back like 10 years or 20 years or 3 years, it's this number, that number. And that's an area of equity analysis I've never thought of. And so be nice to Jim. I ask for you people, not I ask for nothing from you people. Please be nice to Jim. He's a very good guy. And we need short sellers. We fundamentally do need them. You think there's bubbles and corruption and pump and dumps going on now? Huh. Imagine this thing was long only. And there was no like police in there doing their thing, holding people accountable, calling out the frauds. That another thing for Jim Chanos, like him being loud and proud, like vocally short Enron. And this is where I first, discovered Jim was in the, what's this one called? Smartest Guys in the Room, I think. The Enron one. That's such an honorable thing to do because you're knowingly putting yourself in like a less than ideal risk reward position, and that's putting it in the most mild phrasing possible. I mean, like, it's not good. You have unlimited risk, and you can only get 100%. In the most extreme outcome, you can only get 100% return. But and that's where like the pessimistic like personality style comes in. To even like be willing to take that type of trade, you have to have that worldview, that like cynic, like ironically, like Chanos's last Twitter handle was actually Wall Street Cynic. And he and I are in a very small club of people who have deleted Twitter and then come back and like started from zero on the second time. All right, enough on the Bears. But guys, honestly, Jim's a great guy. Like, there's no reason to be like disrespecting him. And actually, back to Chanos. Another good thing about him is like he offers one of the best bear cases of MSTR. You know what I mean? Like, that's tremendous value. In the same way that like Bitcoiners going after like Buffett and Munger, guys, come on. It's like there's actually value in them calling it like rat poison and a scam, and they hate it. Like there's value because their arguments are not good. But that doesn't mean you can't like learn from Buffett and Munger. I've learned more from Buffett and Munger about life than I have even investing. Like that's how like beneficial their rabbit hole can be. And sure, they don't like magic internet money. Who cares? These guys are not tech investors. Buffett was friends with Bill Gates like 40, 50 years ago. He never owned Microsoft. It's like these guys are not, you know what I mean, like paradigm-changing tech guys. They want to own railroads. You know, they want to call the CEO of their railroad company and be like, hey, the train's on the track. And they're like, yeah, boss, the trains are on the track. They want to own energy and the insurance business. I believe Geico is theirs. I forget off the top of my head, but like I believe Geico is like 100% Berkshire. That's what they want to do, and it's okay if they don't like the same things you like, you know. So back off of Chanos, back off of Buffett and Munger. See how we can weave here? Weave just ideas in and out. The credit model. I really appreciated the Bitcoin mezzanine. I thought that was I thought that was very fun phrasing. I enjoyed that. But what are we looking here? That the notional amount, cumulative notional, duration years, the Bitcoin rating. I mean, my goodness, the 2028 converts have a 73.5x Bitcoin rating. Bitcoin risk. I gotta look and see what the calculation is. I'm sure it's on the website. But I'm curious about the how they arrive at the Bitcoin risk. See that maybe it's on here too. Yeah. Probability of an instrument having a Bitcoin rating less than 1 at the end of its duration using a log normal distribution modeling of Bitcoin's price adjusted for Bitcoin ARR and Bitcoin volatility assumptions. Cool. Like it's just nonstop learning. Like for years now, it's just been like learn something new about MicroStrategy. Like I had no idea how like a convertible bond functioned in a company until like MicroStrategy was like, we're selling convertible. We are in the convertible bond business. So it's like, all right, time to learn about that. And I was telling Adrian this too. Like this is just the best company. Like if you're like a quant data nerd, like Excel modeling, automating data flows, like is there a better company to study than strategy? I'll wait. What other company would do the website and put like, you know, the most important like financial metrics, some that are traditional, some that are, you know, in-house created, and just keep this out here on display for the world to see. Like no one else would do that. Like they, like you go to any other company's website, like let's do no, who cares? Let's not get too off topic. But you go to like any other website and they're just, you know, selling their book right away. Like, oh, this is what our company does, and we want to, you know, change the world, and this is our, you know, here's a video of a fireside chat that our CEO recently presented in where we talked about the sustainability methodology for, you know, whatever, you know what I mean? It's like, it's that like corporate propaganda. It's all this crap. It's all this, you know, and by the way, and this might, you know, I don't know, maybe this will be a little edgy. These companies, they have these mission statements, right? And it's always like this, you know, virtuous, honorable. We want to do good in the world of some capacity, and that's why we have this company, and that's our mission statement. And it's like, yeah, that sounds great. Maybe some people believe that, like, the purpose of the company is to like drive the stock higher. I mean, again, I don't do the fantasy land ideology narratives. Oh, this sounds good. That sounds good. Better. Let's phrase it like with that. Let's get the marketing folks on the phone. Let's start pushing this out there. No, companies are there to create shareholder value. So, point I'm making here is like it's like dealing with like objectivity, you know. It's like dealing with a management team, a company who just there's no fat on the bone. There's no excess. There's no crap. They meet the shareholders where they are. They launch, their own data to transparent. No one gives them like credit on like that transparency, but then they'll get crushed over like proof of reserves. And honestly, like the proof of reserves argument is just such a massive, gross oversimplification. And here's like the fundamental like problem is that people are extrapolating the decentralized ethos, like everything on the blockchain, like it's a ledger, like you can see everything, like you can run a node, you can verify it, like don't trust, verify. You know what I mean? Gee, when you talk for like an hour straight, it's like, but it's all this like ethos of Bitcoin, and it's all great, it's all lovely, it makes everyone happy, great. But that, now stay with me here, but that doesn't mean that extrapolating that and overlaying it onto a public company makes any sense. I feel like nothing else has to be said on this. Sailor Fong, like they've talked about this ad nauseum, but this broader extrapolation of Predator, let me throw, not to name names, Predator, who like in 2025 is just simply not grasping. I'm really warm and fuzzy if you get to know me, but it's just really not grasping that a public operating company above $100 billion in market cap is just simply not going to be able to operate in the same way that an individual person or family could with their own asset allocation and their own, self-custody or proof of reserves or whatever. Let's move on. Back to the slides. I just can't get the meatball same. It was like ketchup. It was like a disgrace to Italy. It was a disgrace to what the Italian people have done for this country. It was a disgrace to Jersey Shore. It was ketchup. I mean, it was like, all right, let's get through this. Capital plan. This is one of my favorite slides. I mean, I love this. Showed this to my mom when we first started having calls to get her set up on the brokerage account to buy some of these things, actually, Strike and Strife. I'm gonna get a stretch too, though. I mean, this is the Standard Oil slide. Maybe there's a better example of one, because that's the other thing. There's more. You can't keep up with the slides. You can't keep up with the MSTR research on Twitter. There's just more. It's what, like, the business model of strategy is to take the raw, kind of clunky, kind of not the most user friendly, kind of a delicate thing that requires like tech savviness, and refine that, turn it into, create a derivative of that, create something to, again, meet people where they are, create an equity security type product that people do have a warm and fuzzy with, or I shouldn't say warm and, who cares? I should say that people have like a practical use case application for, in the exact way that, Standard Oil with like, crude oil, the machines needed like gasoline or diesel, or there was a missing step in the process of crude in the ground, and then something that can get a person to their job, to take them on their commute to their job, and that was the refinery. And then perhaps there's like multiple like layers to the refinery. I don't know anything about the oil and gas business, But that's what this is. This like strategy is the refinery of turning the raw, clunky, thing that not everyone's going to want per se, and then turning it into something that they are very familiar with, that fits a use case of their choosing, and also very much fits a volatility sensitivity of their choosing, going back to the the massive premium that people put on a low volatile yielding cash yielding instrument. I saw one of the funniest tweets from I think it was someone who like is bullish on MicroStrategy. I'm totally blanking on the name, but they were like, they were like, oh yeah, no, strategy's not a Ponzi scheme. Like, it was this image. Oh man, you gotta have fun. Oh yeah, what else is there to say here? So what we're looking at here is it's the preference ranking, and then the size of each instrument in pyramid form. What's the problem? What's the problem with the shape selection? I don't know. Oh, mezzanine's the middle one. I thought mezzanine was the top. Adrian was like, what do they mean by mezzanine? I was like, I think that's like top shelf, right? Like that's, where like the luxury suites would be or something like that. But it's actually the middle. All right. Where were we? Okay, so investment grade's the top, mezzanine middle, high yield equivalent on the bottom. And 2 earnings calls from now, there'll be like 7 more categories, all properly defined and like subcategorized and like, classified properly. We leverage our Bitcoin treasury to issue financial products. I had to take an intermission, go to the bathroom during the earnings call, and I come back and Adrian's like, yo, Long Fong just said, what was it, 3 years? 3 to 5 strategies treasury will flip Berkshires. Hopefully. Optimistic with some room for error. But that is just really, compelling stuff, not just in the idea itself, but in the fact that they're like willing to put that idea out there into the lexicon of information, because like each word is like very carefully selected for these types of like formalized events. And again, it just aligns interests with shareholders in the sense that like we're all looking for number go up, and they're showing us like their intentions in meeting that over the right timeline, because again these things always take time. It's like the sailor thing where he's just like, I just want to shake. Here's what happens with these like mega tech winners, whether it's like Mag 7, Netflix, Bitcoin, or is this even applicable to Bitcoin? Is it companies only? No, yeah, I guess it's also applicable to Bitcoin and price only, but it's like the idea is someone wants to get into one of these tech monopolies or paradigm changing like things such as Bitcoin, hold it for as long as they can, and then at some point hope to have like an exponential on the back end. And then if you like were to plot their net worth or like assets under management, whatever you want to call it, on a linear chart, you would hope that it looks something like Bitcoin on like a 10-year linear chart, where like the first like 3 to 4 years, maybe the first half, is like flat, it looks like it's like all zero, but there's some like 500s, 200s, 300s, but it looks like it's just like riding the zero and then it goes up. That's the name of the game. That's where all the money is made, in that process. And then you're just hoping for that exponential on the back end. This whole, I mean, some of us, it felt like we got an exponential on the front end. So that was nice. I'm not complaining, but the real money's still like distant a couple decades into the future. And that's a classic, Charlie Munger phrase, is that people worry too much. People they fret too much. Much of success is being patient, but aggressive when it's time. And I have nothing to add to that. What else is there to say? Look at this. By the way, the silliness of what I'm about to show is not escaping me at all. Let's bring out the magnifying glass here, because we're gonna need like at max zoom in capacity here. Hold on, you gotta bear with me here. I think anyone's gonna be able to see it yet. So if you bring out a microscope, you can see that Tesla has a little bit of Bitcoin. How can I say this diplomatically and maintain good relations with everyone? Has there ever been a bigger flop in the history of the US public markets? By the way, that was the diplomatic, filtered, sifted through it a couple times. I mean, honestly, I've Walter Isaacson said this. I forget if he wrote it in the Elon book or if he said it on the on his Lex Friedman podcast or something. I don't know. I forget. And again, it's like finding a needle in a haystack. Like, where was that one data point within trillions of data points? But Elon, what Walter Isaacson said was, Elon wants the world to be saved, but he wants to be the one doing the saving. And there's no other like one or two sentences that could explain Elon Musk better than that, as far as I'm convinced. And which kind of just like leads me to the question of like, why did he get involved in the first place? I mean, like, and it was such a, like, he's oddly almost the trader that I'm like, dude, what are you doing? All the money's made like on the hope of like an exponential on the back end. You hope the front half is like, riding the zero, and then there's like a big value creation, because I mean, he got into Bitcoin at what, like for Tesla at like December 2020, I think it was, give or take a month. It was before the February 2021 blow off top. I know that. I think it might have been December of 20 or January, probably December 20. Anyway, let's move on. But then I think it was 18 months later, in like mid 2022, they were like, or even before that, I think it was like, hey, we sold like a small amount, like not the big amount that they sold. It was like, hey, we sold a small amount to like test the liquidity of Bitcoin. It's like, test the liquidity of Bitcoin. Why? How is that at all a part of Tesla's like mandate mission, is to battle test the liquidity of the Bitcoin market? And I mean, to be honest, what it was, and this was one of the things that for me, it was like, all right, I really got to at least be open-minded to like exiting the Tesla position. It's like, that answer just does not work. And the reason it seems like they did that is because they had a net income loss that quarter, but were able to, with the proceeds of selling Bitcoin, come out positive. I forget which metric, free cash flow, earnings per share, it's all basically the same thing anyway. But it was one of these was like going to be negative. They sold some Bitcoin, it was positive. Again, doing the optimizing for like the short-term thing. And then you fast forward a number of months and, Elon's on a Cathie Wood space, no video, just audio only, Cathie Wood space. And he's pissed off at the idea of Bitcoin. Like he went out of his way to say, please, no questions on Bitcoin. I don't care about Bitcoin. I don't think about it. But then the great irony is like he'll go on to be like, well, what is money? Money is like numbers in a database, and it's resources. It's if we were on an island, would you want to have 1,000 Bitcoin, or would you want to have a coconut? It's like. But the irony is that he goes on to actually define Bitcoin with like, numbers on a ledger and like the ability to see it and the ability to transact without like, restriction from a third party or a government or a corporation or like whatever, which also like ties into his whole, broader emphasis on like freedom and all that stuff. So it's like, the only singular, and by the way, here's another thing. The board at Tesla is the board of directors at Tesla exists in the same exact way that Santa Claus exists. Meaning it's totally real. Once a year, December 24th, Santa, the red suit, got the reindeer, flying, eats the cookies, the presents. It's all real. In the same way, Tesla's board is real. It's real. So meaning it's just Elon's show. Like Elon's brother is on the board. Tell me how that is in the best interest of shareholders from a corporate governance perspective when the board is there to represent like the interests of like the retail shareholder who doesn't have the resources of lawyers and all these things to like, actually advocate directly on someone's interests. That's what the board's there for. And it's like, the board is there to like hire the CEO, fire the CEO, like conduct corporate governance, and like, again, hire the CEO, fire the CEO. Like there's no way like Elon could fundamentally be fired, which is an actual structural problem given how controversial he is. Here's an example of that happening. Steve Jobs was fired from his own company that he founded like in the garage with Wozniak and the prank phone call machines and the blue box phones where they bypass the operators and they're like 18 years old. They have like free unlimited global calling. And Apple fired him from his own company. In 1985, I believe he was fired. And then he went and did Next Computer and Disney, and 12 years later, the board hired him back. So I say all of that not to just reminisce of business history, but there has to be better checks and balances in that board. Which, by the way, it's real, like how Santa Claus is real. But the only real thing I can say about this is like the narrative of Bitcoin is just never going to be about Elon. And I don't think that works for Elon. If we had to, say, I don't know, think about all the people who are publicly, globally recognized as being a huge bullish advocate for this paradigm changing technology, who was kind of like first to market and being like a big, high reach kind of person, like a business executive of some sort, who happens to already kind of, let's be honest, hold that title, then yeah, I mean, it just doesn't work for his worldview. And to the extent that that's how it is, then yeah, it makes sense. Like, the narrative that Elon's going to want to say is like, the Optimus bot is going to fucking like pay off the national debt or something like, he goes on these rants where he's like, well, when we have like I can't do his voice. I'm not even going to try, but Elon will be like, well, when we have the Optimus bot, and then like everything will be free, and like all the work will be done by robots, and the economy will be unlimited abundance, and like all this stuff. And it's like, no, that's just fundamentally wrong. The Optimus bot, while it can do manual labor and like will bake in that like positive assumption, cannot create unlimited enriched uranium to run like a nuclear energy thing to then power the facilities that make the Optimus robot. Resources don't just like instantly like become abundant because there's a machine, because there's a fucking washing machine with arms and legs walking around that can like, start dinner. I don't know. I'm never getting a bot. Never write it in stone, tattoo it on my face. Never. I feel so strongly about this. I've got a ton of machines already. Washing machine, drying machine, a refrigerator, a dishwasher. Love the machines. I got a Roomba robot. Love it. I want machines that do one thing, Love that. Anyway, more to come on the Tesla bear case, by the way. I wasn't going to do that like, episode 1, obviously. Be like my first episode, just trash Tesla the whole time. Robust access to capital markets. I mean, what else needs to be said here? This is what we've been saying for years. And that's the visual of it. Building retail distribution channels. Love that. I have no interest in like participating in like the actual IPO of these things. Because like 2 days later, it's like trading public. So it's just like one less thing to do. I just, nibble on them once they become public. But it is great that there is like retail growth in like retail participation in the IPOs. This is very, very interesting. The equitizing the converts. And like we've got time to work with here because these things go out till like 2029, 2032. But it seems like, there's like not like a sense of urgency because you want to do this right and time it right since there is time to work with. But it's like, all right, let's almost be done with these things since we're just all in on the prefs for all the right reasons, at least I think. Can I rename this? All right, yeah, let me just, sorry guys, let me just rename this before because I don't want to lose the chance. It's been bugging me. Today's been one of those days, like I woke up, had to clean the room, Adrian's coming over. A lot of hectic, scattered details here. Thank you all for bearing with me. All right, so strategies, Bitcoin capital plan, and credit strategy. Midterm target Bitcoin, BTC ratings. Think the numbers look great. We currently intend to reduce the overall. This is what I was literally just talking about. We currently intend to reduce the overall senior convertible debt outstanding over time. We will seek to equitize the existing convertibles, simplifying the structure. Right. I that's like what I was getting at. Like we want to like simplify the capital structure. I like this do the live stream right after the earnings calls. You got to keep doing that because then it gives me like a quick like second read of the slides because I missed that the first time through. Preferreds are intended to remain perpetual. Good. Preserving flexibility, minimizing default risk. We intend future offerings to be sized and timed to maintain targeted BTC ratings. Number 4, strategy will aim to be the leading issuer of Bitcoin-backed credit with clear and disclosed internal standards, disciplined leverage management, and transparent capital. I think I might end the show right there, honestly. Strategy will aim to be the leading issuer of Bitcoin-backed credit with clear and disclosed internal credit standards, disciplined leverage management, and transparent capital allocation. That's exactly like the bit strategy thesis right there. That is it. That is it. He was the one who whispered in my ear the theory on why strategy should have the highest MNAV of them all. And he's like, look, it's because they're going to have the best credit rating. Plus, then you combine that with like a Bitcoin force type concept where it's not just Bitcoin yield, it's also Bitcoin dollar gain to have a size and speed thing. Because look, Bitcoin yield. Do I even want to go there now? No, let's not even go there. We will arrive there at some point, though. I promise you. But I really do just want to wrap the show here. I know there's more slides. The expectations beat was great. I love that. Long Fong was like, hold on, let me just see what else we got here. We're not gonna do the comparables. All right, yeah, we're gonna wrap this up in 5 minutes. I loved when Long Fong was like, at the beginning of the year, we started with, our expectations for, Bitcoin yield were 15%, and we've doubled them throughout the year. So I think most people would consider that to be a success. Personally, I would consider that to be a success. And what this also is too is this is like the classic example of under promising and over delivering. Classic example of that. And some people thought that the first equity ATM on the 2121 plan back at the end of October, the timing expectations was like, we're gonna do this over 36 months. They did the whole thing in like 3 months. And some people were like, no, that was too much, too soon. To me, I was like, great. They underpromised and over-delivered. But to each their own. But I mean, for this one, like in this middle Bitcoin yield thing, to be doubling that is like really impressive, considering if you now shift to the right side, the Bitcoin dollar gain. And this is the thing that always gets left out of the conversation for whatever reason. Well, actually, I know what the reason is, because the smaller Bitcoin treasury companies and the people who cover these companies, they only want to talk about the yield, the Bitcoin yield, because this is like small market cap base effect stuff of having like 10 Bitcoin, or having like 1 Bitcoin going to 10 Bitcoin. And then now it's like, we got 1,000% Bitcoin yield. And I'm not saying companies are actually doing numbers that small. I just picked a small set to get the point across. Although I think Jim Chain has posted, there's some like European or Asian like nail company that bought like 1 Bitcoin, which is the most righteous purchase of them all, by the way. It's just so cool. We get lost in like the like strategy size numbers and like that stuff. It's fun to see. Makes you happy to see that kind of stuff. And yeah, that's really what I was getting at with the yield, as far as like, should we go there? Should we not go there? It's like, there is just obvious, like, guys, this is just obvious that like people are only covering Bitcoin yield for these small companies and conveniently never touch about Bitcoin dollar gain. And the analyst community, for whatever reason, has adopted Bitcoin yield as this comparison metric when that's not what it is. But if we are going to use it as a comparison metric, then let's use it as a Bitcoin dollar gain metric, right? Like, Bitcoin yield was introduced at a time back in my day when there were no other Bitcoin treasury companies. In no meaningful context, such as like a PE multiple, where that is very much used to compare what's the PE of General Motors compared to Ford. It's like 3 and 5, by the way. Those things do trade at 3 and 5 times earnings. It's how bad those businesses are. But Bitcoin yield was invented at a time when there was no other Bitcoin treasury companies. So it's not this like universally accepted comparison tool. So anyway, not to, people think I'm trying to like beat up on the other Bitcoin treasury companies. I'm just, what could I even do to impact these things? And that's obviously like the least of my concerns, but I thought I handled the Metaplanet thing quite diplomatically. Sorry. I never said a bad word about anyone, because there is no bad word to be said about the Metaplanet thing. It's just, do I own any of it now? No. I think there's a limit to investor demand for just this positive base effect math in Bitcoin yield numbers. Like, at some point, we all know at some point that stops. And don't make me bring up the 21 million hard cap supply to really drive that home, but I will go there. But what I'm saying is, like, these exponential numbers and all these things, like, yeah, they're all great on a look backward basis, but on a look forward basis, gravity is real. Gravity is real. I'm not ashamed to admit that. So one last time, Strategy will aim to be the leading issuer of Bitcoin-backed credit with clear and disclosed internal credit standards, disciplined leverage management, and transparent capital allocation. Good night, everyone. It's been a long day. Gonna wrap here. I have no problem doing like 2 or 3 hours in the future, but I gotta get that meatball sandwich thing out of my head. I have to. It's been a long day. Been a fun day. Been a very historic day. I will do Q&A on the next show. Feel free to like throw questions out there on Twitter. I'm gonna start like compiling a list of questions that I can touch on in the shows, and I really do enjoy doing that, because I end up learning something just from the question, because when questions are worded in a very like creative way, it just by reading them in that order forces me to have to, adjust my thinking process, or like at least reassess my thinking process. So I feel like I get a ton out of it as well. And I really do like love the enthusiasm, love the energy. Like, if I was to show my mother my Twitter DMs, she would cry. There is people just saying like the most heartwarming things imaginable, and it's heartwarming. So thank you for that. And I love doing this, and I want to keep doing it. So thanks again. Historic day. One small step for man, one giant leap for Bitcoin. Good night, everyone.